In the world of crypto, what happens when a really big, bold experiment, well, just doesn't work? Today, we're diving into Cardano's biggest decentralized exchange, Minswap. We're going to look at how a year's worth of data led them to a massive strategic pivot that honestly could change everything for the entire network.
So, just how big of a deal is Minswap? Well, this number pretty much says it all. A whopping 72.4% of all the decentralized exchange volume on the entire Cardano network flows right through them. That, my friends, is what you call absolute market dominance.
And it's not just about the total cash value either. If you look at the sheer number of individual transactions, Minswap is consistently at the top of the charts. There's no debate. They're the undisputed leader. And that's what makes the experiment they just ran so important.
Okay, so to really get what's happening now, we have to jump in our time machine and go back about a year, to March 2025. This is when Minswap decided to try something pretty radical. It went against all the conventional wisdom of how these platforms are supposed to make money. They just dropped their fees to zero.
The idea behind it was actually super simple. The hypothesis was that trading fees were a barrier, holding back growth. So, get rid of them, and you'd unleash a flood of new users and tons of volume, especially from smaller traders. The goal? Go for massive growth, even if it meant not making any money from fees in the short term.
So, the big question is, did this huge gamble actually pay off? Well, after almost a full year of running with zero fees, the team sat down and took a really hard, honest look at the numbers. And let me tell you, the data told a very, very clear story.
And you have to give the Minswap team major props for their transparency here. They just came right out and said it. In hindsight, that decision did not achieve its intended objective. It just didn't work. But what's really fascinating isn't just that it failed, but why it failed. Let's dig into what the data actually showed.
So, finding number one, even with Minswap having zero fees, the total trading volume across all Cardano exchanges actually went down, hitting all-time lows. Now, of course, the broader market conditions were a big part of that. But here's the kicker. Zero fees weren't nearly enough to fight that trend or create any kind of sustainable growth.
Now this might be the most shocking piece of data from the whole experiment. Remember how they wanted to attract all those smaller traders? Well, the increase in activity from orders under $1,000 was zero. A big, fat 0%. In fact, sometimes those orders actually went down. The exact people they were trying to attract just didn't respond at all.
And it wasn't just people clicking buttons. You'd think the automated trading bots and aggregators, the software designed to sniff out the cheapest possible trade route, would flood Minswap with orders, right? Well, they didn't. They didn't send significantly more volume their way. And that proved that the whole zero fee thing just wasn't the powerful competitive edge they thought it would be.
So, with all this crystal clear data staring them in the face, Minswap made a tough call. They decided to pivot. They announced that fees are coming back, but not as a step backward. They framed it as a necessary, responsible move to make sure the protocol is healthy and sustainable for the long haul.
And their game plan here is pretty straightforward. It really boils down to three key things. First, the fees will finance their infrastructure, to cover the actual costs of making trades happen. Second, it'll fund the protocol's growth based on how much it's actually used, not just by dipping into their savings. And third, and this is a big one, it's meant to strengthen their own MIN token, which directly benefits their community.
Yeah, that last point is absolutely crucial for their community. The fees are designed to directly benefit anyone holding the MIN token. Part of that revenue is going to go to staking rewards, which are already sitting at a pretty healthy 7.7% APR paid out in ADA. Another chunk is used to buy back MIN tokens right off the market. They've already done that with over 300,000 ADAs worth. This new fee structure is going to supercharge that whole process.
Okay, but this story gets even bigger. This isn't just about Minswap's own strategy. At the exact same time they're making this pivot, they've positioned themselves right at the center of launching something that could be an absolute game changer for the entire Cardano ecosystem.
It's called USDCx. So what is it? Simply put, it's a stablecoin, a crypto token that's always supposed to be worth $1. But what makes this one so special is that every single USDCx on Cardano is fully backed one-to-one by real USDC, one of the most trusted stablecoins out there, held securely by the financial tech giant Circle.
This quote really says it all. You hear it all over the ecosystem. For years, people have praised Cardano for its security, its research, its methodical approach, but it's always had this one glaring weakness:
no robust, native, fully backed stablecoin. It has been a huge bottleneck.
So why is this such a big deal? Well, with a native stablecoin, when the market gets crazy, people have a safe place to park their money without having to leave the Cardano ecosystem. That keeps liquidity on-chain. It makes everything, from trading to lending, way more efficient. It also opens the door to tokenizing real-world assets, and, maybe most importantly, it makes the whole network look way more attractive to big institutions.
You really can't overstate it. This is a major infrastructure upgrade for Cardano, and its design is secure and non-custodial, which means it doesn't rely on those sketchy, risky third-party bridges to move value around. This fits perfectly with Cardano's whole philosophy of security and resilience, which is a massive deal for building long-term confidence.
And all of that brings us to the final critical question. You've got Minswap, the dominant player, shifting to a sustainable, revenue-generating model. At the exact same time, the entire ecosystem gets the deep, stable liquidity it has been desperate for. So you have to wonder, is this 1-2 punch the catalyst that will finally unlock Cardano's full potential in the world of DeFi? We're going to have to wait and see.